Hello, everyone. It's this week's Stocks episode. I'm Jam,
I'm Cons.
and we are two bros interested in finance. As it is a Stocks episode, I'll let you have the lead and I'll comment on things because we have a lot to talk about, in my opinion. As we have did for the crypto episode, we have a lot to talk about in the Stocks episode as well.
It's been a while, bro. It's been a while. Yeah, let's just start with our GetQuin performance as always. And it's not looking good for the first month of January. Year to date, we are both down 2.5% on the aggregated. For me, year to date, that's 0.6% in the minus, and for you, that's 4.2% in the minus. So yeah, we're both in the red. We're both underperforming the S&P, I believe, for the first year,
But
for the first month. Yeah.
I like to mention one thing about that before you continue, because I think this is worth mentioning. So I did I did say this before we made up GetQueen as well, and before, like, we always tell this to our followers. We are not doing this GetQueen portfolio and we are trying to catch the dip with GetQueen. We are just buying it with the price that we have on that day, which is essentially the first day of the year, which I think was January the 1st or the 2nd, like the first couple of days of January. And we are not trying to catch the dip. And I said that at that time as well. SAP right now is very expensive. For example, for me, it was SAP. SAP is very expensive, and I am not going to buy it personally. I said that it is going to drop to 160s, 170s, and that's when I'm going to buy it personally. But with our GetQueen portfolio, because we want to show our real returns, and with the stock picks, with the company picks that we have, that's why we have the big losses right now. But I think at the end of the year, even with the expensive prices that we got, I think we are still going to make good money. But I would like to mention this in our personal portfolio, we don't buy it from those prices, those expensive prices. We try to catch the dips from for our personal portfolios. But this is what we have right now, and this is the reality. And I just would like to mention, we are not trying to trick
Yeah.
people. We are just playing with the rules. That's what I mean. Like, we're just trying to be honest, essentially.
Yeah, it's pretty much our picks for the year, right? We started at the
Yeah,
beginning for the year. It doesn't represent our personal portfolio performance either. I mean, it's like the stocks from last year, right? Which aren't on the
yeah,
list this year. Like like AMD, for example, or ASML. I mean, talking about ASML, we're gonna talk about it anyway, but quickly. But we both still hold ASML. Just because it isn't in our list doesn't mean we sold it or got rid of it. And as we
yeah,
both know, ASML is performing amazingly this year
yeah,
so
yeah.
far. But yeah, I think it's just a tracker to know which stocks are our stocks for the year, right? And of course,
Exactly.
if they get interesting throughout the year or cheaper, it's always a good time to buy it, right?
Yeah.
Okay. So yeah,
I just wanted
yeah,
to mention this because
yeah,
I don't want people seeing it and saying that, oh, these are scammers. No, we are not scammers. This is just like how we play the game.
yeah. So honestly, like the our performance on GetQuin, like for the January is way worse. I think my personal portfolio is up 6% already in January, so I'm doing really fine compared to the
Yeah,
S&P. So yeah, it really depends, and also the entrance prices are a bit special, of course. But yeah,
yeah,
let's continue though with the stocks, and I would just start with Netflix.
yeah.
Year to date, it's down 8.2%. It had a cheeky little dip, and we both bought. I mean, I bought again, I believe, and you bought for the first time with, I think,
ASML,
no, Netflix.
Netflix. Yes, yes, yes,
Yes,
yes,
yes,
yes,
yes,
yes,
yes,
yes,
yes.
yes.
Sorry. And I think I owned it last episode already, but I did buy
Yeah,
again, and of course, you bought it as well. It had a nice dip, and it also had earnings. So earnings went out pretty nicely per Google. They beat the revenue by 0.7% and the EPS by 1.5%. They had record numbers of subscribers. I think they've reached 320 million subscribers or active users. And yeah, personally for me, the numbers were great. I had nothing to complain about. Netflix really showed strong financials, and yeah, I mean, I don't really know what to add. I feel like Netflix is a good deal right now. I feel like it could drop a little bit more, where I would add more Netflix if I can.
Yeah.
Um, but I think it's in a really good position right now to be a decent
Netflix,
buy.
definitely, definitely. I am going to buy when I sell my cryptos more. I am going to buy more. What's it called? More Netflix when I sell my crypto. But right now, Netflix is in a really good position. I 100% agree with that.
Yeah. The only thing I could maybe add to Netflix is maybe it reaches below below the $70. I would really like to see that.
Oh yeah, oh yeah.
Um, if we reach these like 2021 heights in the high 60s, then it would be, I think I would go all in on Netflix.
Yeah,
But yeah, let's see. Let's see. I would be
yeah.
really happy if it drops more and I can add more. That's for sure. But I'm happy with my position right now.
Oh yeah, 100%. No, we are in a good position. I think with Netflix, I think my average is like around like 86, maybe 85,
Mm,
maybe 88. I'm not sure, but like around that, I think by the end of the year,
a
I
great
think it's going to
average.
be more than fine.
Yeah,
So yeah,
yeah.
should be
Uh,
fine.
then I would continue with Amazon. Another pick from our GetQuin year to date, up 5%. I don't know. I don't have much to add with Amazon. I just wanted to tell the year to date. And yeah, it's doing Amazon things a bit slow, but it's slowly crawling up. But I think it's fine. I'm happy with Amazon as always. It's a slow
Yeah,
grower
I
or a
think so.
slow mover right now, but I'm fine. If it goes up 20% this year as well, I'm more than happy with it, really, I have to say.
Oh yeah, 100%. Yeah, I think
Um,
it's going to be fine. Yeah,
yeah, 100% no. Then I'm
I
gonna
think I
check.
think this year is going to be Amazon's year in terms of Max 7.
Yes, I think
That's why
I
we
think
bought it.
yeah, yeah, yeah. I think we both agree on this with Amazon is has some catching up to do, right, in general. And
100%.
yeah, let's just see if it does it. Novo Nordisk had interesting start of the year as well, up around 12%. On the Danish market. And yeah, it's making a little bit. I mean, it's no one disk. I'm not surprised it does a 10%, 15% up. That's fine. It's been quite low, but yeah, it does these moves. There was a huge sell-off, normal to do some retracement, go up 10, 15%. Let's just see whether stock keeps moving. Otherwise, I would move Bank of America is down 5% year to date.
Yeah.
um, Financials not doing well. I think I'm gonna touch that with Mastercard as well. Had also a little bit of a sell-off at the beginning of the year. So
I think the main reason why we have these sell-offs in the market is that in financial is that the Trump is saying that he wants to cap the interest rates of the
yeah,
credit cards to 10%. So I think that's really affecting, but you know, I think that's not going to happen because like that's like the backbone of the whole financial sector. I don't think it's going to up, but I think the uncertainty is like really getting to the market, and yeah, that's it.
I mean, I understand this 10% cap on credit cards. I understand this, but if this would be the case, it would affect the banks more than it would affect Mastercard actually, because Mastercard doesn't really profit from this. This is they only earn per transaction, right?
Mhm,
So it's not really the credit card limit. I guess the transaction could go down. Maybe that's a fear, the number of it. But yeah,
mhm.
in general, I think yeah, it's just interesting. Bank of America and Mastercard had a very similar drop, 4 to 5%. I'm very you're eyeing a Bank of America still, and I'm eyeing Mastercard. So we both want to add in both of these positions still. Yeah, very interesting. I think we're gonna keep an eye on them, right?
I am waiting for Bank of America to drop around like 40 somethings, like the high 40s for me to add more. I'm waiting for that, and I think it's going to drop because like the
Mhm.
financial sector is quite questionable right now by the market sentiment. But other than that, I think yeah, it's just they're in a good position.
I think for me,
Like in
Mastercard, it's below $500 would be a great deal for me. Um,
yeah, yeah, yeah.
but yeah, let's see if it actually happens. But yeah, I'm gonna continue with Alphabet, which also had a great start to the year. Surprise, surprise. Up 7.3%. So yeah, very modest start, but people are still liking the stock. And yeah, we both still continue to hold it in our personal portfolio. And of course, myself, in my GetQuin, I guess one of the only ones that's actually in the plus with Novo. um, so actually, the ones that we thought will not perform are performing the best at the beginning of the year. Crazy, man. It's
That's what
always
it always happens. This is what
jokes,
happened
man.
with like
Yeah.
we kept saying this about like Google and ASML throughout the year. Last year we were like, should we sell it? We don't have
Yeah.
a trust in it, and I was like the really trustworthy one in that. But yeah, so it's just like the markets, man. They always do like weird things, and yeah,
Yeah, the market loves to prove us wrong,
that's
man.
wrong.
It's just, yeah,
Yeah,
it's just
yeah.
how it goes, right? It's the market.
Yeah, like so I wouldn't be surprised if Google stops doing well and like the Netflix, Amazon are like top picks for the year just starts like making tons of money. Like I wouldn't be surprised. You know what I mean? Like
Just because we say Google is doing well right now, it's gonna do that.
yeah, exactly, exactly.
Uh, but yeah, we still both hold Google, so I think we're gonna keep holding Google for now. It's on a run. Um, it's getting interesting though. I'm just gonna touch on this quickly, because Google is trading, I think, at around 30 PE ratio. It's I have great returns. You have great returns as well,
Oh yeah,
and it kind of gives you a little bit the trigger finger. Realize some gains,
100%.
take
Yeah,
some cash.
yeah,
That's always in the back of my mind. But I've had this at 250 US dollar as well. I had this at
yeah,
280 US dollars, and now it's trading at like 340 US dollars nearly. So yeah, it's it's always like worth holding, I guess. And I think that's what we
yeah.
continue. Last stock of the GetQuin, SAP, mashallah, it's a terrible stock. It went down 15% year to date. What the hell is happening?
But this is what I meant in the beginning of the video. Like we knew that it was going to drop.
Yeah,
Okay,
yeah,
that was like a really unexpected, really volatile drop. Yes, I
yeah.
accept that nobody expected this big of a drop, but we knew that it was going to happen. So and it happened, and now we are just like seeing the market. Like we knew that this was going to happen. This is why we stopped and waited for the stock. But in our GetQueen, of course, it's like very expensive. But I think by the end of the year, I think it's still going to be worth it.
Yeah, so SAP had like the major trigger for the sell-off was the earnings, right?
Yeah, yeah,
And I think what was it, the cloud backlog, which was a problem. And I just want to touch on this. I mean, you bought SAP, right, on Friday, I
yeah.
believe, or Thursday, on this
I did.
major drop, and we talked about it. It has to drop. It's too expensive. You didn't buy it before. I didn't buy it yet. I'm really tempted to buy a small position or start at least in SAP, because I feel like this is a great opportunity. But I like to wait off. It's like not trying to catch the falling knife. It's kind of like a
Yeah,
rule of mine because I've had bad experiences with that. Um, so I like to wait a little bit and see how the market feels about the stock next week, how the sentiment is. Um, uh, but yeah, what I want to say, it's like all these kind of software companies are having a terrible time right now. I'm just going to touch on Salesforce as well, which is down 16% year to date. So I'm suffering in this position. Just a little info right there. And Microsoft as well. They had a huge sell-off as well of 10% year to date down. And I feel like there is a really, and this is why I'm a little bit careful about SAP as well. I feel like there's a really bad sentiment around software companies right now. And
I
of
agree.
of course, this kind of sentiment can reverse instantly, right? But like can happen tomorrow as well. But yeah, I don't know. I think this is the whole AI fear and AI replacing some software companies. Or parts of the software company, like within SAP or Salesforce, or even I don't know if you know it, ServiceNow is having a really bad time as well. A huge company or software company in America, and yeah, I don't know. I'm just a bit. I'm a bit careful. I'm a bit scared. I'm already invested in Salesforce a little bit, and want to hold back a little bit regarding this.
So I would say this about the difference between Microsoft and SAP. So Microsoft came out with the earnings. Not that they had bad earnings, but the AI investments are not getting the returns that they expected to get with
Capex.
the OpenAI collaboration and everything. The difference with SAP, I'm not sure about Salesforce. I don't have much idea about the company, but like with SAP, they are not heavily invested in AI. They are just like a normal company that uses AI, but they are not heavily invested in AI. So I think that's the difference between Microsoft and SAP. And that's one of the reasons why I wanted to invest in SAP, because I was like, they're not heavily on AI as much as other big techs. They are just a company that does the automation things for other companies. So I think SAP's future is brighter than Microsoft, but at the end, you are very right in terms of saying, oh, the sentiment in within the tech sector is not the best, and yeah, it is not the best. I agree, 100%.
Yeah. Yeah, yeah. I don't know what to add. It's really difficult to judge right now the situation with these companies. I mean, in my mind right now, I have other companies on my buy list that I prefer over SAP, like Netflix, like Mastercard. So for me, those are on a higher thing. And even I think, okay, I we talked about this personally. If I had the cash, right? If I had 100K lying around, I wouldn't blink a second and put 10K into SAP, right? Like if
Yeah,
I had
yeah,
the cash. But because we don't have the cash and we don't have money growing on trees, we have to make decisions like which company we like more, right? So I think
yeah,
even if I choose, I don't know, because already being invested in Salesforce, I think I would prefer investing into Microsoft over
yeah,
SAP, I guess. But yeah, I'm a little bit scared as well with the whole tech and the whole cloud, already being in Google, already being in AMD, already being invested in ASML. Do I need another stock in this direction? Probably not. So yeah, I'm really, with ASML, I'm going to talk about it in a second as well. It's like on the edge, profit taking or whatever. Is it going to crash? Um, a little bit scared, man, when you see these like 18% drops, 10% drops, and then going back to commodities, you see also 10% drops, then Bitcoin drops 10%. Like, what's next? Right? That's the question. What's next? Um,
yeah.
but yeah, I
By the
think,
way, SAP is one of those companies, one of the rare companies that actually makes transactions with cryptos, by the way.
I didn't know that.
So yeah, yeah. So like, I don't think that it's related. The drop is related, but it's just a weird coincidence.
Yeah, yeah, no. No, I mean, in general, I'm still gonna say it, I like SAP. I've owned it in the past. I've said this before. I think it's a great company. And even if it drops another 20, 30%, I think you're gonna be more than fine for the next 5 to 10 years invested in SAP. And uh, I think that's all you need to know in general.
Yeah,
It's gonna be fine.
yeah,
Um, I would move on quickly, just talking about ASML, also up 22%, one of our top performers in our portfolios. Crazy performance year to date, amazing earnings. I think they increased their lithography units sold by over 40% since last year. And yeah, I think they had a little bit of an EPS miss, but beat their revenue But in general, it was amazing earnings. I think it was exactly what analysts expected, and the booking books are full again, still since the same as last time. And I think if they keep remaining full, orders are keep remaining in. But they did cut jobs, which was really interesting to me. Even though they're selling record high numbers of lithography machines or these chip making machines, their employee numbers are actually going down, or they're firing people or letting people go, which is interesting. But yeah, I don't have a problem with it.
Um, it's like, with these big companies, like, okay, employee cutting jobs is of course an important factor, and also it is important factor of, like, with these big companies, cutting jobs doesn't necessarily mean that they're doing bad. I think it's just like a financial decision. So, and
Yeah.
ASML is doing well with the financials, also with the earnings report and everything. So I think cutting jobs doesn't really matter because these are big companies. It's just a decision, financial decision that they have.
Hmm.
But I don't think it's an indicator to think that, oh, this company is doing bad.
No, no.
I don't know. I don't buy it.
No. No, no, I 100% agree with you. It's definitely not an indicator for anything like that. Honestly, I see it as more of a positive catalyst because in my experience, at least in the last 5 years, whenever I hear this, and I think Amazon is a perfect example for this because they just cut jobs 24/7.
Yeah.
Every time I hear news, it's 10,000 more jobs cut by Amazon, 1,000 more here. And yeah, whenever they say something like this, for me, it's like, oh, the stock is gonna go up. It's for me in my thought process, like, oh, the company got less people to pay, which means
Yeah.
more profits. So
Yeah.
yeah, this kind of news is always taken well by the stock market, I feel like. And yeah, ASML, amazing, amazing performance here to date, man. What can I say? It's crazy. Maybe it should have been our stock pick for 2026. Uh,
Yeah. Yeah. I mean,
s-
last year it did well as well, but like it's doing way better this year.
Yeah, it's already had an amazing start, right? And let's see if it can continues. It's starting to reach a point where I mean, again with the trigger finger, it's kind of like, but on the same time, ASML is getting in the region where it is getting like expensive even for ASML, right? So I think with
100%. Yeah.
I think we're talking like 45 PE ratio, and
Maybe
now,
even more, to be fair. Maybe even more.
yeah. So yeah, at this rate, yeah, I'm always thinking like, okay, maybe take a little bit of profit and buy in again after it drops 20-30%. I wouldn't be surprised, man. I can definitely see
Yeah.
a little correction. It had a beautiful run. I can see it back down to $1,000. Like I don't even have a problem with it because I would think this shit is healthy. It's needed. Um, but of course, I would be sad because I didn't take profits on the top. But
Yeah.
but then you obviously have to buy in again when it drops, and so forth. But yeah, it's it's just I'm a little bit, on the on the trigger thing.
Yeah.
I don't know if you get this as well, like waking up
Time
in
to time,
one
yeah.
morning and like, oh, today I should just sell my position, take the profits, and I don't know, whack it into Mastercard and Netflix. So but otherwise, last two topics I would quickly touch upon was a Lockheed Martin and a Rheinmetall, two stocks which are not part of our GetQuin, but um, we like to talk about it. And Lockheed Martin, man, like crazy run, 28%
Amazing. Yeah.
year to date, and also Rheinmetall is up 11 to 12% year to date. And I think it also had a nice, like even at the end of December, it had a start of a little rally again because, I know you weren't too happy about it. And bam, now I think it was up like, I don't know, 1900 euros again. So it was really close to the
Yeah,
2000.
around
So
there.
really
Yeah.
quick moves it did there. And yeah, I think, my opinion about Rheinmetall is keep holding it, man, for the next 5 to 10 years at
I
least.
am holding it,
Yeah.
and my entrance for Rheinmetall is like disgustingly cheap. Like I'll tell you, my entrance price for Rheinmetall is 472 euros. 472 and a
like
half
that.
euros. This is like disgusting, nearly 300% in plus. And Rheinmetall, okay, before we made our GetQuin portfolio, or before the year started, we didn't know about the fact that Trump was going to be this aggressive in terms of like politics. He did the operation on Venezuela. He's doing trying to do operations on Iran and everything. If I knew that these things were going to happen, I would tell you, and we would of course think the same way and say that okay, this year is going to be the year for defense stocks, right?
Mhm.
But we didn't know any of this. But like at the end, at least for me and also for you, because you're holding Lockheed and I am holding Rheinmetall, it's just going to be a really good year for us. Like rather than SAP, I would have put Lockheed. But like you can never know these things. I am still
Yeah.
happy with my picks. I even bought SAP for myself. But this year, I think the defense stocks, like last year, are going to be really good winners, in my opinion.
I think, yes, like you said, Lockheed was a good buy, but yeah, it's always easy to say afterwards, after the stock goes up
Yeah, yeah.
30%, I told you, bro, it's gonna go up. I feel like, it's always easy to say and nobody can predict it, and these kind of, for me, Lockheed was a no-brainer long term, right? I see the
Yeah,
company,
yeah, 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 yeah.
it's a leading military company or manufacturer in its field, right? And yeah, for me, this was kind of the okay, this is a no-brainer. I'm gonna buy it. I didn't buy that much of Lockheed. I bought a normal amount because I was like, okay, I'm gonna put on some this year, and next year I'm gonna add some more. Like keep adding to Lockheed, increasing the positions over a year, and holding it forever. But of course, I'm fucking happy because I think I'm 40% in plus. I think I bought twice, and within this short time period for such a conservative stock, fucking amazing returns because I didn't expect that. But yeah, like you said, um, I think military stocks are gonna have quite a good time. Yeah, I would even say for the next 5 years, just because of this ongoing tension, and even if we resolve all ongoing conflicts right now, talking Venezuela, Iran, Ukraine, Russia, whatever is going on, I think the tension would still remain, right? Within
Oh yeah.
within politics, within the countries, like even if the Ukraine war is over now and oh, it's snowing outside, even if the Ukraine war is uh, over now, right? Like we're not going to invite Putin tomorrow to the new gala, right?
No.
It's not. It's
Yeah,
going to
yeah.
take at
Even
least
if
two,
like
3 years.
if we get news tomorrow saying that oh, Ukraine war is over, everything is settled.
Mm,
Israel Hamas war is over, everything is settled. Iran and American tension is gone. Tension is still going to be there,
yeah, exactly.
no
The
matter
bear
what.
is like it's like chilling. I don't know. It's like chilling with a friend who betrayed you or some shit. It's like you always have like
Yeah.
like it's politics, right? You're not gonna forget what happened like 2 years ago and when they bombed your city. So yeah, it's I think that's what I'm saying with the military is gonna have a really good time. I think Rheinmetall, Lockheed, and all other major ones are honestly like there's so many good like base systems. We haven't talked about them in a long time, or like Saab from Sweden. And yeah, I think we're really well.
I think in terms of like in Europe, I would say BAE Systems,
Yeah,
Leonardo, and Rheinmetall are gonna be the winners. Maybe Rolls-Royce, but I would choose a BAE over Rolls-Royce. And in Europe, in UK, I think it's BAE. In
yeah, but
Europe, I think it's going to be Leonardo and Rheinmetall are gonna be the winners.
yeah. There's some, I keep a track on the German market, and the German market has like a little bit other companies like Renk or ThyssenKrupp,
Yeah.
which are really interesting. Of course, they're not on the same level as Rheinmetall. There's also rumors like of Volkswagen entering the military production,
Um,
So of course there's a lot of potential there, but like as a safe bet, I would prefer Rheinmetall. The big players are always a good safe bet. Maybe Airbus potentially. Um, I'm not so sure. I don't know enough, but, we always liked Airbus last year, would have been a good buy. Um, but yeah, I think pretty bullish, man, pretty bullish. Lockheed Martin's gonna
but I am telling you, in Europe, I think my choices would be Leonardo and Rheinmetall. In
Mhm,
the UK, it's going to be BAE. And also in America, it's going to be what's it called? Lockheed Martin. And also, I would like to mention one Turkish one as well. I even sent you to stock because,
mhm,
like, yeah,
mhm,
I made like nearly 300% in that stock in the last 2 years. Aselsan, amazing
mhm,
company.
mhm.
You can only buy it in the Turkish market,
Yeah,
but if you guys ever into Turkish market access, and I already made like so much money with that stock, and I'm still holding it, and I'm gonna keep holding it because like Turkey, unlike Europe, Turkey is actually like way more in the Middle Eastern wars than
yeah.
Europe is in Ukraine. So yeah, that's how it's going to go.
Yeah, no, I don't know. I got nothing else to add. I think they're
Yeah.
gonna go amazingly, and yeah, as we said, I don't think it's gonna cool down that quickly. Otherwise, I don't really have anything else to add. Oh yeah, wait, sorry. I wanted to talk about this Meta actually, just as a side topic.
Meta, yeah.
Had actually some pretty good earnings. I think they beat their EPS by 8 to 9%, and their revenue by solid 2.5%. And they really had, like, compared to other stocks, while Microsoft was selling off and SAP went on a falling knife kind of story, Meta had the 10% rise. So they were really uh, enthusiastic about buying Meta. And I believe it was, I know we talked about like a month ago, right? And I don't know if you remember me saying, oh, it is actually currently the cheapest Mac 7 stock, right?
Hmm.
And
Yeah.
yeah, I think it would have been interesting. Uh, but yeah, I kinda like Meta. We talked about this, I don't like Mark Zuckerberg as a person too much, but that shouldn't bother me because I like Meta. Meta is Instagram, Meta is WhatsApp, it's even Facebook, even though I
Meta is
don't use
everything.
f it's yeah, I use it daily. I always use not Facebook, sorry. I always use WhatsApp, I always use Instagram.
Yeah, exactly.
And I know, even though I don't use Facebook or Messenger, I know, like, for example, in Eastern Europe or in the UK, I believe it's very popular to still
Yeah.
use Messenger. And yeah, for me, it's kind of like it's there. Everybody uses it. It's a perfect product. Where the hell should it go the next 5 to 10 years? So yes, Meta is always kind of interesting for me as well, if I really think about it. And yeah, could have been an interesting buy as well on the recent dip.
Oh
I
yeah,
don't know.
100%, 100%. Yeah, yeah. Okay.
Um,
If you don't have anything, do you have anything else to add about Meta or
Nothing
anything?
else. No, nothing else to add unless you do.
Yeah.
And I think we can call the episode here.
Okay. Okay. So thank you guys for watching.
Oh,
You guys know the drills. Yeah.
s- we should look at next week's earnings, maybe.
Oh yeah,
That is,
next week's earnings. Okay,
w-
let's look.
we are in an interesting time again.
Uh,
Now it's gonna be quite
oh.
interesting.
Oh yeah, actually.
Yep,
Yeah,
yep,
yeah, 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 yeah.
yep.
Monday Disney.
With Disney, we don't talk about it much. It's
Oh,
doing
because
well.
we
It's doing
have
fine.
Netflix, which is better, but still Disney's an important company. I can't lie with that.
Yeah, we have Disney, and then after close, I think the most important for me, at least, is Palantir, just because of its impact on investors
Yeah.
and in the market right now. Um, on Tuesday, I don't see anything too interesting except Merck and Pfizer before open pharmaceutical companies, and then after
There's
close.
Pepsi, but
Oh, I didn't even realize that's the Pepsi logo.
yeah, exactly. You see?
And then after close, we have Amgen, another pharmaceutical, and AMD. So this is one I'm gonna watch very closely because I still own AMD, and it is quite a large position. But I'm gonna be extremely bullish on AMD. I'm still very bullish on AMD, and I hope that the earnings will show that. Um, On Wednesday, we have the double kill, Eli Lilly and Novo Nordisk, the two competitors, and AbbVie, I believe, which is also a pharmaceutical. Uber, sometimes interesting
Hmm.
for us, so we might watch this.
Yeah.
And then after close, we have
After
our favorite, bro.
Google.
Good old
That's the one that we
Alphabet.
are going
Yeah.
to watch
Yes, sir. Yes.
religiously.
Yes, sir. Literally the best company in the world, in my opinion.
Yeah.
And then, on Thursday, we have Shell, Linde, uh, before earnings, and then we have after close, which is really interesting, I guess Amazon and
Amazon, we are
MicroStrategy.
going to watch religiously as well.
Yes, yes, yes. Amazon, I think, is gonna be very interesting. On Friday, I don't really see anything.
Nothing.
But yeah, interesting earning season. We've entered earning season, so some market. I think I think this is also gonna be a very determining factor now for the weeks to come because, as you remember, I think we were both a little bit bearish in the first quarter, first half of the year, right? We were like, okay, we have to be a bit careful. But I think these earnings, what are happening now, and what we had already last week, like Mastercard was quite good, ASML was quite good, right? The stocks that we hold were quite good. Um, so I think it really depends, like how Google looks or Novo Nordisk looks right now, or AMD, and I think that's gonna determine the next quarter, bro. So better hope for a
Yeah,
fucking
yeah, yeah.
beat, right? But yeah,
I think it's going to be fun.
yeah, same, same. I'm quite bullish,
Okay,
bro. All
okay
right.
then. So thank you guys for watching it. You guys know the drill. Your grandma, your grandpa, share, like, and everything. Catch you guys on the next episode. Bye bye.
Ciao, ciao, guys. Ciao, ciao.